Hi everybody, this is Ospreyeye from mychartcoach.com, and in this video we're going to take a look at some of the stocks that were in play today. Okay, yeah, we had some several different stocks that were up on the day. If we look here first, we're going to take a look at OSTK. Okay, this is overstock.com, and I'm just going to run through the charts real quick. As you can see, it's been on this really long uptrend ever since the middle Bollinger Band turned into support back here. It's been a multi-month uptrend. Middle Bollinger Band's been holding. Today's close was above the upper Bollinger Band. It formed an indecision candle, almost a doji. So if the candles do work back into the bands, the key level to hold is going to be EMA 4 at 38.47. Notice how there hasn't been a close below that level since going back here into the to the 10th. So yeah, so the uptrend strong. There's a big volume spike. You could see a little dip with the candles working back into the bands. As long as the middle Bollinger Band is 32 is holding, the uptrend is still intact. If you look here at the OSTK weekly chart, you can see it's been on a really nice multi-month uptrend. There was a break here above the middle Bollinger Band in the 50-day or 50-week simple moving average, then a break above the 300-week moving average, then finally this break above the 200-week moving average on the first week of August signaled it was ready to break out higher. That was the top moving average on the weekly chart, and notice the candles have been riding this pink line the entire time. So as long as EMA 4 at 35.84 is holding, the signal for the long-term sweep trade is to keep riding. If the candles do work back into the bands, you know, EMA 4 has been holding for multiple months. Once you see it close below that level 4, or this is the weekly chart, once before on the week, for the week, that will signal the chart's cooling down and you can see it pull back. But as long as that's holding, the signal is to keep riding. Notice there's really big volume behind the move. When it's breaking out on the weekly chart, well, what we needed to do was look at the monthly chart to find the next resistance zone. So each candle on this chart represents 1 month of trading, and you could see it's on this 3-month run, and last month it broke out above the top of this multi-year descending resistance line. So that was a signal it was ready to break out higher, and it had big follow through this month. So right now it's breaking out above the high close for 2013, and then now it's also breaking out above the high close for 2007. So it's above all levels since going all the way back to 2005. So this is the current resistance zone. This 2005 resistance hitting around 43 or so is the big level to close above now for the month. If it can close above that for the month, remember this candle will not set until the closing bell on the last trading day of the month. Yeah, you know, a lot can change between now and then. The next big zone is going to be up here at 55. Okay, that's going to be a key level between 50 and 52 to 55. That's going to be a big resistance level to break. If you can get above that, then you're talking about a run back up to the 70s. The high close is all the way up here near 72. So as long as the candles are riding EMA 4 on the monthly chart, the uptrend is extremely strong. The one red flag is this month's candles pushing well above the upper Bollinger Band, which is currently way down at 30.85. So sometimes the candles have to work their way back into the bands. If that happens, there could be a pullback all the way down to EMA 4 at 30. Okay, that would, you know, the candles could pull back to that level and bounce off of it, and the chart would still be very strong. So just keep that in mind. Yeah, if support keeps holding, the signals to keep riding. You know, there is a huge volume spike this month, so you always have to be on the lookout for a climax spike. Okay, so what the key is to follow the 15-minute chart if you're trading, and if you look here on the OSTK 15-minute chart, it had this open here. It was the high close of the day, and that's currently the key level to break. It dropped down. It found support down here around the 50 simple moving average, around $38, and then it had a really nice run into the close. Notice how it broke back above the middle Bollinger Band. It was riding EMA 4 into the close. It did form on a doji right here at the key resistance level, so it's got to break above this 41.75 level to head higher. If you see it close above that level, it could run back up to 43. As long as the middle Bollinger Band and the 50 simple moving average are holding on this 15-minute chart, the chart is very strong. There was a PSAR bull flip and MACD bull crosses into the close. So yeah, so nice move for OSTK. Yeah, so now let's take a look here at ROKA. Okay, so ROKA had a really nice move today. It closed up 54%. It had a nice bounce. It formed a bullish reversal pattern today. It did break back above 50 on RSI. It's at 55, and Fasto's at 51. So both indicators closed back in the bull zone with a lot of room to run until the overbought levels. 80s overbought in Fasto and 70s overbought on RSI. So take a look at this huge bounce. You know, we alerted the bounce was happening in the morning. We were looking for a break above the 50-day simple moving average in the middle Bollinger Band. That's the green line and the dotted purple line. And it ended up breaking above both of those levels and EMAs 4, 8, and 13. So the close above the top of these moving averages was signaling more upside potential. Now the upper wick did hit the key resistance level to break right near that zone. That's this golden line here. That's this 100 simple moving average at 189. So it needs to close above that level. It closed above that back here on the second week of October, but it failed to hold that level and it pulled back. So what we're looking for now is a bullish change in trend. You want to see it close above that level hold, and then the next target would be up here at 290. Okay, so the closing price here on the 12th is the other key level to break, 220. So you've got, you know, 189, 220, break a close above 220 would put this 290 200-day simple moving average on deck. Notice there was a huge volume spike today. So there's a big volume spike. You've got MACD pinched here and hooking up on the 8, 13, and 5. The bullish reversal pattern today was bullish one white soldier. Notice the open was above yesterday's close, and the close today was above yesterday's open. So this is a nice bullish reversal pattern. We'll be looking for confirmation. The key, once again, is to follow the 15-minute chart. Notice how it pulled back. It found support, very similar to OSTK, and then it ended up running into the close, very similar. And what it did is it filled the jar back to this high close resistance level, which was the 1030 closing price. It's also lined up here with the 300 simple moving average at 169. So this 170 resistance zone is the big level to break. If it can break above 170, then that's going to signal that it wants to head higher. If this turns into resistance, then it could consolidate. You know, if there's a break below the middle Bollinger Band and this green ascending support line, that would signal the chart was broken. Also, if this 200 simple moving average turns into resistance, that needs to hold support. So right now, the top moving average on this chart is the 300 simple moving average. Once it can break above that level, that's the signal it wants to head higher. So we'll see if it can follow through. It had the PSAR bull flip and the MACD bull crosses into the close yesterday. Okay, so take a look at MARA. This stock made a nice move today. It closed up 12%. It's got RSI back in the bull zone at 55 with a lot of room to run. Fasto closed at 65, so it still has room to run until 80. You've got this nice hooking up plus DI. Look for the green line to cross the black line, ADX to the upside. That's what we call an ADX bull cross, and that signals the bulls are taking control. If you look here at the chart, it was forming this falling wedge pattern. Notice the descending resistance and descending support. It bounced off of this 50-day simple moving average at 38, the zone here, in the bottom of this channel, and it closed today above the top of this resistance line and above the middle Bollinger Band, EMAs 4, 8, and 13, and the 50-day simple moving average. So this was a big close above 5 key resistance levels. So now what we're looking for is for the middle Bollinger Band at 41 to hold. As long as the candles stay above the middle Bollinger Band, it will stay in play. If it closes below the middle Bollinger Band, it will be a risk to hold. Right now it's that easy. 45 is a big level to break. Okay, so this was resistance, and then you've got the upper Bollinger Band up here at 46. If it can bust through both those levels, you know, you've got the closing price here at 47.50, but the real big level on this chart is 51. If it can get above this closing price here on September 27th, that will signal it wants to head higher. So yeah, so it had the PSAR bull flip, the MACD bull cross on the 8, 13, and 5, and then it's pinched down here on the 12, 26, and 9. And notice it was the largest volume day in the month of October. So the chart's really heating up. It just has to follow through and turn turn the middle Bollinger Band into support. Okay, take a look at XCO. This stock closed up 39% today. We alerted this stock a couple days ago on Monday when it closed above the middle Bollinger Band. Check it out on the 23rd. It closed above this dotted purple line. Middle Bollinger Band support had broken on the 11th, and then and that started a downtrend. And then we were looking for this level to break. It had, like, for a whole week it was testing the level, and then finally that happened on Monday. We put out alerts. It paused yesterday. People forgot about it. Notice that on the 23rd it was on really light volume, so nobody was really getting excited about it. But you can't overlook a very bullish technical development. That's how you miss out on the big moves. So what happened here is this put it in play. The middle Bollinger Band held, and then there was a big breakout end of day today, and it closed above the 50-day simple moving average. That's this green line at 138 on a volume spike. Notice it was the largest volume since all the way back here in August. So volume is a clue here that it wants to head higher, also with the break above resistance. So if it does pull back, which it easily could do, because the candles did close well above the upper Bollinger Band. The upper Bollinger Band at 151 will be the first key support level, and then right below you've got EMA 4 and the 50-day simple moving average at 138 and 143. You want to see those levels hold if you're a bull, because if they hold, that'll signal this new uptrend is intact. Notice where the close was today. It was at the top of this descending resistance line. So this is a multi-month resistance level. So it's not a coincidence that it closed right here. It needs to break above, turn that into support, and if that happens, we'll be looking for a run up to the 100-day simple moving average currently at 206. Also, this high close here on August 28th. Notice how those two levels are lined up with each other. Okay, so yeah, so this is the next target if it can continue heading higher, and then we'd be looking for a close above the 100-day simple moving average. Notice that you've got the 200-day simple moving average way up here at 526 and the 300-day simple moving average at 882. So this has a lot of room to run if it can get a new uptrend going. Take a look here at the XCO 15-minute chart. It had the classic setup. Okay, we talk about this every single day in the chat, and it's all about this setup. Okay, it's the tight Bollinger Bands on the 15-minute chart leading into a break above the moving averages. Notice how tight the trading was. Super tight. Look at the volume volume bars. Super low volume. The signal is that it's setting up, that what you're looking for is a break above resistance. And so that finally happened here at 3 o'clock. You had the break above the top moving average, which is this candle right here, which was the green line. So you always look for the top moving average on the chart. So it was holding the blue line, which was the 300 simple moving average. You had the 50, the 100, and the 200, 150 all converged here. And so the close above, that signaled it was in play. Okay, and notice how there was a volume spike at 3 o'clock. Very small, very subtle, but it was your clue that it was heating up. So take note. All right, this is the money. This is the chart. Okay, so then when you got the volume picking up, that was the signal it was ready to head higher. Notice how the candles were writing EMA 4 support, volume very strong into the close. So it was the break above the moving averages once again that signaled it wanted to head higher. So keep that in mind for when you're charting in the future. When you see those tight Bollinger Bands in the 15-minute chart, it signals that the consolidation period is coming to an end soon, and that a new trend is about to begin. It could break down to the downside, but if it breaks to the upside, that's your signal to take action. Okay, so take a look at the DCIX daily chart here. It did close today above EMAs 4 and 8. So the close above the green line here is signaling more upside potential. It closed right at the level. I mean, it's at 46. It needs to turn that level of support. Today's upper wick did hit the next key level to break, which is the 50 or the 200-day simple moving average in the middle Bollinger Band at 50 and 51. So a close above both those levels will be the signal that possibly a new uptrend is starting. So the chart's heating up. It's been in this really tight sideways channel. The volume spike today is a clue. But it has to stay above EMAs 4 and 8 to be a good play with this setup. Okay, so if it drops below 44, it will be a risk to hold. This is always a risky play. The big volume down here at the bottom signals that people were loading, and so now we're just looking for a break above these two key resistance levels, and we want to see them turn into support, and the candle's riding EMA's 4 and 8 support higher. Now notice how the pink line and green line are pinched. If that EMA 4 crosses EMA 8 to the upside, that's going to be your early reversal signal. Okay, take a look at DCIX 15-minute chart. What you have here is a break above all the moving averages. So this is what caught our attention today. It started off below the middle Bollinger Band. It got above the 50 simple moving average. It came back down, tested support. then it finally got above the 50, and then it broke above the 100, and then above the 200 and 300 into the close. So the last two candles closed above the 200 and 300 simple moving averages on the 15-minute chart. As long as the share price stays above 4, 5, 6, above this blue line, it does change, keep that in mind. As long as the candles stay above the blue line, the 300 simple moving average, that signals more upside potential. If those levels do not turn into support and they turn into resistance, that will signal downside risk and more consolidation. So above these two lines, signals more upside, below signals downside risk. Okay, so take a look at NEOT. This is the last chart in this video. This stock, has been in this nice uptrend. As you can see here, it had turned the middle Bollinger Band into support. After the really tight Bollinger Bands, it broke out above the 50-day simple moving average. It was riding EMA's 4 and 8 support higher. And then there was this big gap up open, and the share price busted out above it. There's multiple gaps in the chart now. There's this gap back here, and it started filling the gap. The top of the gap is this red line up here close to 230, but it didn't hit that level. It did pull back and worked its way back into the Bollinger Bands. Notice that it's been holding this 200 and 300 day simple moving average support levels. They're at 123 and 119, and so the red and blue lines are the key levels to turn into support. If they hold, then you would be looking for a push back up to the upper Bollinger Band at 157 and the closing price on the 17th at 170. Those will be the two key levels to break. If they can get above both those levels, then you'll be looking for a gap fill. To the downside, if the 200 and 300 do not hold and EMA 8 at 111 breaks, you could see consolidation, and then you have a gap down here. This is the top of the gap, and this is the bottom of the gap. So, on a pullback, it would signal a potential gap fill. So the bulls want to see the candle stay above the 200 and 300 day simple moving average now that they closed above. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.